Hey guys, um, sitting here trading London, and I wanted to record this one. Sorry that I'm jumping in mid trade with you. Uh, I just didn't play the recording earlier, but it was a really good one, and I wanted to show you the things that we speak about and how they unfolded during London today. Okay, so we have on the upside. I've marked the Asia high buy side liquidity, which was purged. Um, and here I am marking a volume imbalance. Now, why is this volume imbalance so important? It's important because of where it forms. It forms the high of the volume imbalance coincides with Asia high buy side liquidity. Okay, so on the left of it, we have a BC, and then on the right, I marked with this little red box a another fair value gap with a volume imbalance, which corresponds to the BC that you see on the left. Okay, uh, we overlap it. We trade aggressively down, and this here, guys, is the market structure shift that I like to see. Okay, we have the Venom here, right at the very top, and then we confirm this market structure shift. Look at my entry. My entry is in the fair value gap that formed um, when we displaced down after we formed the market structure shift. Now, I had the patience to wait for it to retrace all the way back to this fair value gap simply because the gap below the next one, when we traded to it, it was first of all it wasn't a macro window, and secondly, um, because there was this volume imbalance, I expected price to trade all the way up to it before it drops further. Okay, and that's what it did, right? And then we started trading down. We traded down back to the first presented fair value gap of yesterday. Okay, Monday, June 16th. That's the purple box on your screens. Um, we traded through it. Okay, displaced away from it. Then price returned back to it, and this failed to close above it and displaced one more time down. Now, this second displacement, the next red box that I drew, uh, this is the model that I was teaching you about first presented fair value gaps. I could have pyramided here. I didn't do it because I positioned myself extremely well right at the top of the move. So I didn't really want to uh, pyramid and put my trade in a higher risk. I'm not a fan of pyramiding, to be honest, because very often, if you pyramided the wrong place, you might get screwed really bad, and from very good profit, you can end up with a massive loss. So I'm not a fan of that. Okay, but anyway, and I'm not a fan because I guess I'm not very good at it, admittedly. But anyway, this is the model that I was teaching you here. Look, the second displacement, we trade back to this CB, and then price starts dropping. My initial targets here were the um, that's the first presented fair value gap of uh, what is it, June 11th, Wednesday. But then I moved it all the way down to Asia low, and I decided not to take partial, but to go fully out of my trade because I don't expect price to drop all the way to the sell side liquidity that I marked, which is actually the um, sell side liquidity that resides at 7 o'clock of yesterday. Okay, it was left open yesterday. We didn't trade to it. And today, I think that's the near term, short term target that we will trade to. Um, Also, on the way down, we have the opening range gap of yesterday, which we might see filled completely today. This is the one to watch later on during New York. Um, but anyway, you will see me now switching my take profit to closing the entire trade with 7 contracts, and I'll move the target to Asia low. Okay. But anyway, now you see that I'm watching this wick that I just marked on my chart, and I'm watching to see if price wants to displace up from it. Okay, which means to leave a fair value gap or a BC starting from this low and going up. Okay, that for me, if it happens, is a red flag, and I have to consider a deeper retracement or a reversal happening. And as you can see, this is not the case here. Price stopped right at this um, low, this previous low, and then started dropping aggressively uh, down to my final objective. Okay. Anyway, I hope these things, guys, that I'm talking with you, they make sense. I hope you can see these things on your chart, um, because they happen every single day. And if you have the patience to wait for the setup to come to you, okay, you don't have to chase setups. They come to you, okay? That's important. That's important because they don't come every single minute of the day, okay? You have to wait for them. You have to be patient. And trading rewards patience. It doesn't reward greed. It doesn't reward um, chasing price. It doesn't reward over leveraging. As you can see, my risk here was very, very minimal. I risked $250 on this trade to make, I think it was like $1,400 by the time it hit my take profit. You'll see it. But anyway, that's what I wanted to share with you guys. The setups that I've been teaching you, they happen every single day. They happen out of New York as well. You just have to be uh, conscious and aware, patient, wait for them to fall into your lap. Okay, and there it is. All right, guys, if you're new around here, hit the subscribe button, smash the like on this video. Thank you for watching. Thank you for the support, and I will see you in the next one.